Hello, everyone, and happy Saturday morning. We hope that you're having a fantastic weekend so far, and you've had a wonderful week as well behind this. Today, we have a very exciting, maybe not so much exciting for some of you out there, but a great topic today. We're going to be talking about closing, and we're going to be talking about closing fees and all the things you need to consider while looking to close a property. So if you have not closed a property before, this will be an excellent stream for you to be able to get to understand a little bit more of the terms, the processes, and how everything works during closing, okay? So let's first of all talk about what closing is at a high level, okay? Essentially what it is it is the conclusion of a transfer of property from a seller to a buyer, for someone who's holding the property now to someone who's purchasing it in the future. That might actually be you, right? So the way that it works to get to closing is that you generally get a purchase agreement signed, and depending on if you're buying a single family or a multifamily, that might also include what's called a letter of intent, LOI, for multifamily, so that way you and the seller can get kind of familiar with the terms that you might want to use, and then the seller can pick the best offer that's out there for that LOI, okay? And so generally what happens is you get the purchase agreement signed after the LOI is all finished, or you go straight to purchase agreement with a single family home. And then after that, you start going through the due diligence process. You start looking at getting the property inspected. You walk the property, you have an inspector on site. You may have some inspection contingencies or some things to negotiate with the seller. And then you move on and you get to the settlement statement. You get close to closing. This is where you've got all the elements kind of coming together in one place. Okay. So what that means is that you're getting a third party involved, which is called a title company, that helps transact the buyer side and the seller side and is neutral to both sides. So they're the ones that are kind of juggling all of the different contacts there. There's lenders that get involved. There is an agent on both sides potentially, or brokers on both sides. And then you have buyers and sellers. And then you also have lenders that are involved. So there's all these people that the title company is working to kind of bring together to understanding, and then help facilitate the transaction as a neutral party, so that everything gets recorded clean and there's a clean break as of the day of closing. Okay. So there's a lot of work that goes into all of that. And it is kind of a process, but the closing is the formal transfer from the seller to the buyer. It is that day, and once the closing is all signed and the money is transferred, and then it is now your property, right? So what I wanted to do is, now that we understand what closing is from a more detailed perspective, let's start talking about some of the closing costs that might be involved with closing. And maybe the best way to do that is to go through a couple of examples for some properties that I've closed on myself in the past. And what we can do is we can kind of look at a closing statement. So let me go ahead and share my screen. I'm going to go ahead and pick a settlement statement that we have seen before. So here you should see on the screen what is a very simple single family home closing cost settlement sheet. So this settlement sheet is what you're going to get when you start to get close to the end of the closing process from the title company. Title company will prepare all of this. They'll pull all the information from the lender, from the insurance people, and take care of taxes, and they'll do all the prorations, right? Because if you've already paid taxes for the year, then they're going to credit either the buyer or the seller based on what is due and what's already been paid from the day of closing, that, or at least is anticipated to go through. Okay. And then of course you have, the rent prorations too, that comes into it. So that's something you have to provide. There's security deposits there, as you can see. But really what we wanted to kind of touch on here was title charges. It's very interesting here because in order for the title company to facilitate this transaction, there's a couple of things that they need to get paid for. The first is the fact that they're doing all this work and putting all these numbers into the spreadsheet. That's one of the things that they do. That's called the document preparation fee or settlement or closing fee. Those types of things are all kind of rolled in. It just depends on who you're working with. But then there's also something called title insurance. And when you're buying a property, it's a little different than when you're selling a property. And I think this is actually a selling statement for me. But whenever you're buying a property, you're going to want to make sure that you have title insurance. And title insurance is something that you've got to basically pay for. And what it means is that you've got the chain of title of this property going all the way back to the time that it was initially parceled out or claimed, right? And so you've got this chain of title that goes all the way back. And what you don't want to have is you don't want to have a situation where you don't have title insurance. And in that case, you've got someone from the past, like from the early 1900s or from the mid 1900s or something, and something was missed. And it turns out that they're actually a 50% owner on the title going all the way back to 1950, but it was never recorded anywhere, or it wasn't recorded properly. So what that means is that that owner that had all of that equity stake early on in the process, they're due, or they're actually entitled to that share of equity, whether it's half of it or the entire thing, based on that agreement that was fully legal and contractual back in the day. So the title insurance helps ensure that none of that situation is going to happen, that you're not going to have someone coming up from somewhere and saying, hey, I actually own this property. Here's the piece of paper. That title insurance is basically saying we're guaranteeing that if that does happen, we'll compensate you for either the property itself or whatever equity you paid for, or we'll make the situation disappear. So that's kind of what the title insurance is for. Okay, so those are some things that you got to be aware of for closing. And then also the other thing is recording fees. So in order to work with the government, they have to take this closing document and put it into their files somehow. So because it takes them a little bit of time and energy to coordinate all that and store it and keep it all under one roof, they're going to have to charge you for that. And so that all kind of comes out in the negotiation for when you're working with the buyer or when you're working with the seller, depending on what side of the transaction you're on, as to who's going to pay for that. And sometimes there's standards, there's customary ways of doing this in each state. So sometimes the buyer pays for all the closing costs, sometimes the seller does. It just depends on the situation at hand, okay? Now, for multifamily, a lot of it is pretty much the same, except for this one, we're going to jump into a little bit more. We're going to have, security deposits that get transferred. That's the same, but there's earnest money that also goes in when you're on the buy side, right? So when you're purchasing, they've got to keep track of all of the stuff at the title company. They've got to get the 1031 exchange monies that come in, if there is one, taxes, rent prorations, broker commissions, loans. They put all of this together for you, so you don't really have to do too much except answer all of their questions. Okay, and so this is kind of an example of what that would look like in a multifamily property type situation. And the other thing you can look at here is there's even more escrow fees and these ALTA endorsements in this case. And sometimes you just have to go through these. You can ask the title company what these mean. But in my case, when I looked all of this stuff up, it just means that because it's a multifamily property and it's pretty old, there's a lot of amendments or a lot of different deviations or endorsements needed to add to add basically some language to the closing package that will be conveyed over to what's held in government on title. All that stuff is going to have to be put in writing, and there have to be a separate clause for each one because there's special exceptions to each one of these codes from the ALTA code, which is like some special code that was used back in the day that uniformed all of the real estate transactions. There was like utility requirements. There was zoning requirements and all of these things that were there that maybe have deviated. And then so we're just capturing that and continuing that grandfathership in using all of these types of closing costs here. Okay. And then, of course, at the end, there's also some other things like, there's more environmental work sometimes that needs to be put into this. And so it's the title company's job to keep track of all of this. But I will say, when you're closing, sometimes not everything is captured in title, even though everything that has to do, once you get to the purchase agreement and you open up escrow, then everything should go through title pretty much, especially things with your lender. But whenever you're getting to the purchase agreement, right? So sometimes you'll have to walk the property, so you have to pay for an inspection. Sometimes you have to have some legal preparation to get all of your entity docs together and form your entities in order to purchase real estate. Those are things you have to do. Sometimes you have to travel to the property. All those things are other things that that come out of your pocket that isn't necessarily shown in the settlement statement that's going to be for the buyer and for the seller. So you have to be aware of what those costs are. Okay. And so when it comes to closing, having an idea of what all of those little fees are is going to be really, really important to help you sharpen your saw and figure out what it is that you can offer your investors or yourself as a return based on the cash outlay that you're putting to transact and make this deal happen. Okay. So I hope that that gave you guys a little bit more of an insight into what it is that we do or what you should be looking for when you're looking to close properties, right? So just last minute thing I want to remind you of too is that there are a lot of costs for due diligence. So whenever you're buying a property, it's expensive, and it makes sense for you to build some of those costs into the transaction itself. So whenever you're getting ready to purchase a property, make sure you have sufficient funds for potentially earnest money, right? Whenever you get into a property for a multifamily property, they're going to want to see a significant amount of earnest money to go in. So either you or one of your partners may have to put that up in order to close the property, in order to get the process started for the seller, right? Then you have to pay for inspection. You have to make sure there's enough money in reserves, because what happens if you close on the property and then you have zero in the bank? That's not going to work. You have to bring money into the bank account where all of your deposits are going to be held and where all of the funds are going to be sent out to title. You got to have some extra cash buffer in there just to make sure that if something happens in the first month, you're going to be able to pay for it. And if the cash flow gets tight and you got to make bills and you're negative for a couple of months, you're not going to go bankrupt, or you're not going to have issues trying to keep this property afloat, right? So you got to have reserves. Sometimes you got to pay for or have like a 6-month tax and insurance, property tax and insurance reserve as well, because sometimes you may take over the property and then the tax bill may be due right there. And then sometimes lenders will require a COVID-19 reserve. I know that we're not really seeing that too much anymore, but last year we saw it a lot where lenders wanted to see an extra buffer worth of principal and interest payments kept in cash or escrowed out from closing directly from the closing statement, so that that money is like gone, like you don't even have it, right? So that means you have to make up for extra money. You have to bring extra money in so that you don't have like a loss or have like a shortfall of funds in your own personal account. So again, making sure that you understand what kind of costs are there for due diligence and also for closing of transfer and title, and doing all of these things by doing your due diligence and really checking with your agent and your broker, and also with the title company. Just call up a title company, even though you may not be or have an active transaction currently. That would be some worthwhile due diligence, so that when you're getting ready to put your numbers together for how much cash you're going to need to bring to the table in order to finally transact this, you'll be well prepared, and you won't have one extra thing to worry about, which is bringing enough money to the table. I cannot emphasize how important that is, because you have enough on your mind already to try to make sure that this property is right for you and you're putting the right numbers out there and making it happen. You don't need the extra pressure of not having enough money to be able to close, even though you're kind of committed, because you've already submitted earnest money and you're already in the deal itself. So I think that is good enough for today, and I hope that was useful for you guys. I know that for me, I wish that I had known some of this stuff earlier on, because it would have really helped me refine my pencil and be able to define exactly how much an investment's going to cost, including how much it takes to get into the deal as well. And so I just encourage you guys to take a look at that a little bit more. And if you have any questions, please reach out to us and please interact with us. Let us know how we're doing. If we're providing content that's useful, we want to hear that. If it's not so useful, we also want to hear that. So please write some comments in wherever you're watching this or listening to this. We would love that. And we just want to interact with you and also make sure that you are getting the right value for your time here. So with that, I'll go ahead and wrap this up, and thank you guys so much for listening. If you want to learn more, or you want to find out about how commercial real estate can help preserve your wealth, there's 7 ways that does that. Please click the link in the description, and that will bring you to a free ebook that will show you exactly how to do all of that as well. And we have tons of information on our website at elevateequity.org, and on our YouTube channel and our podcast, our book. There's tons of stuff out there for you. So please get out there, get engaged with us, and let us know how we're doing. And we are hopefully going to be working with you soon. And with that, I'm going to go ahead and end the live stream. So thank you guys so much. Have a great weekend. Enjoy, and we'll see you next time.